A lottery ticket can lose for the person who bought it while still sending money into several parts of an economic system. That's crazy. The ticket looks like a tiny promise printed on paper. Follow its price, though, and it becomes a map. Some of the money moves toward prizes. Some supports the business that sells the ticket and the operations that keep the lottery running. What remains can move into state revenue. The question is simple. When someone spends a few dollars on a lottery ticket, where does that money go? Hey, it's CJ, the creator of this channel. If you want to make YouTube videos like this, then topic2video.com will handle everything for you. Just input your topic, choose a video length, and a full-length video about your topic will come out the other side. I know it sounds simple, but it's true. Try it for free today at topic2video.com. Start with the purchase. A player gives money to a retailer and receives a chance at a prize. That exchange is an example of economics, which is the study of scarce resources, incentives, and the decisions people make. The resource here is the player's money. The incentive is the possibility of receiving a much larger prize. The choice feels small because the payment is small. The system depends on that choice happening again and again across many players. A lottery turns individual decisions into a pool of money large enough to distribute across several destinations. The prize pool receives a major share of ticket sales. Part of the money returns to players as prizes, creating the lottery's visible promise. One ticket may produce a payment, while many others produce no prize. A losing ticket can still help fund the prizes that make winning possible. That's crazy, right? The exact share depends on the jurisdiction and game, so no single percentage describes every lottery. The ticket price enters a larger pool. The prize portion is only one channel within it. Even when a buyer receives nothing, the purchase supports prize payments and the other functions connected to the sale. A ticket combines a private possibility for the buyer with a shared pool created by many purchases. Retailers give lottery sales a physical home. A convenience store, grocery store, or other seller processes the purchase and provides the ticket. Retailers receive compensation and their stores connect the lottery with customers. The exact payment depends on the jurisdiction and game. From the customer's view, the transaction is a simple exchange at a counter. From the system's view, the retailer makes the product available and completes the sale. That compensation means the ticket price cannot be treated as money traveling directly to prizes or the state. The retailer is one destination in a connected chain. Different jurisdictions and games can organize the flow differently. The useful categories are prizes, retailer compensation, operating functions, and the amount left for state revenue. Running the lottery takes work. The system issues tickets, records sales, handles prizes, and manages the process. Those tasks require money. Gross sales means money collected from players before payouts and costs are removed. Net proceeds means money left after those amounts are accounted for. Gross sales are the starting line, not the finish line. They show how much entered through purchases, but not how much is available to the state. Money first moves toward prizes, retailer compensation, and operations. Only then can net proceeds be identified. This distinction matters. Total ticket sales measure activity at the beginning of the process. Money reaching the state is a later measure. The exact path and amounts depend on the jurisdiction and game. Some remaining money can reach state government. In the United States, lotteries help state governments raise revenue. Their tax and non-tax collections can include lottery sales or net proceeds. This is part of public finance, the way a government collects and uses money. Accountants first subtract prizes, retailer compensation, and operating costs. The state then receives the net amount assigned to it. The final number depends on the jurisdiction and game. Lottery accounting varies, but the public finance role is clear. Ticket sales and net proceeds can appear in state collections. That is why where your dollar goes needs care. The money does not follow one identical route everywhere. A careful general answer identifies the stages. The payment enters the lottery, part supports prizes and sales and operating functions, and net proceeds can move to the state. State revenue is the end of a process, not the entire ticket price. Players repeat the purchase because they trade a certain amount of money for a chance at a much larger outcome. Economics studies this decision because people respond to incentives while using limited resources. A possible reward can make the purchase feel worth considering even though the payment is certain and the outcome is not. The lottery sells entry into a possibility, not a promised financial return. Check this out. A player may focus on one possible prize while the lottery depends on many separate choices. Scarcity means resources are limited. Choosing a ticket means using money this way rather than another way. The system does not need every buyer to study the accounting map. The visible prize possibility can motivate the purchase while other destinations stay hidden. Combined, many small choices create money for prizes, retailers, operations, and state revenue. The phrase, millions of small losses sold as hope, describes the gap between the buyer's view and the business's view. A player sees one chance. The lottery combines money from many tickets and sends it through prize, retail, operating, and state revenue channels. Hope is personal, but accounting brings every purchase into one system. One person responds to an incentive and decides how to use a limited resource. The lottery receives the combined result. The ticket is neither only a dream nor only a budget line. It is a small consumer choice connected to a larger flow of resources. The prize creates the possibility, the retailer enables the exchange, operations keep it moving, and the remainder can become state revenue. Return to the original ticket. Its price begins with a player's decision. It moves toward prizes, passes through the retail and operating system, and leaves a net amount that can support state government revenue. The exact percentages belong to each jurisdiction and each game. The underlying logic stays clear. A lottery is a revenue system built from repeated consumer choices. The prize supplies the possibility. The sales network supplies access. The state receives the portion that remains after the system's other destinations are accounted for. When you look at a ticket, you are looking at a small purchase. When you trace the money, you can see the larger machine behind it. If this changed how you read the price of a lottery ticket, follow the channel for more stories about how money moves. Hey, it's CJ, the creator of this channel. If you want to make YouTube videos like this, then topic2video.com will handle everything for you. Just input your topic, choose a video length, and a full-length video about your topic will come out the other side. I know it sounds simple, but it's true. Try it for free today at topic2video.com.